Welcome to the Ctrl Alt Disrupt podcast. My name is Jason Illian, one of the managing directors here with Koch Disruptive Technologies. If you listened to the show before, we're here talking about creative destruction and all the ways of innovation, technologies, and business models that often change that, and also the pioneers that are driving it forward. Now, if you're not familiar with the term creative destruction, it was coined by Joseph Schumpeter, and it's really about continual internal revolution, disrupting the old ways and incessantly creating new ways. So the best way to think about it is just continuous innovation and entrepreneurship. So if you tracked with us before, we've had a number of great people on the show. We've had Steve Case, who founded AOL. We've had Matt Mullenweg, who founded WordPress. We've had Bill Tai, one of the first investors with Zoom. We've had a number of others. And today, guys, you're in for a real treat. Now, if you're not familiar with these gentlemen, you certainly are familiar with many of the technologies and platforms that they've helped pioneer. Help me bring on to the show two guys that I've gotten to know and love over the last couple of years, Tyler and Cameron Winklevoss, the founders of the Cryptocurrency Exchange Gemini and some of the first investors in Bitcoin. Guys, welcome to the show.
Hey, Jason, thanks for having us. It's a pleasure.
Yeah, thanks for having us.
Good to see you guys again. Now, most founders and most entrepreneurs don't get the opportunity to be part of one world-changing platform, and arguably, you guys have been part of two. So starting on the social networking side and now here on the Bitcoin side. So walk me backwards a little bit. How did you get started with Bitcoin, kind of the when, where, and how, and what got you excited about what the potential is here?
Sure. So we found Bitcoin in the summer of 2012. We were on vacation in Ibiza, of all places, an island in the Mediterranean. And we actually weren't really looking for the next big thing. We were on vacation, and somebody recognized us from the Social Network movie, and we started talking, and he said, hey, have you guys thought about virtual currency or Bitcoin? And we hadn't. But when we got back stateside, we started reading a lot about it, and we're just totally fascinated and sucked in. And that's really when our love affair with Bitcoin and crypto began. And we sort of said, look, this is the first money that's purpose built for the internet. That was sort of one aha moment. And then the second was this has a fixed supply. It's sort of like digital gold. And we started to buy Bitcoin shortly thereafter and accumulate a position. And in doing so, we sort of, it was the Wild West days. And very risky and scary. We bought a lot of our Bitcoin on an exchange called Mt. Gox in Japan that was run by two Frenchmen and their pet cats. And it famously imploded with like $1 billion a few years later. Thankfully, we weren't caught up in that. But we said, look, we love this thing, but if it's going to go mainstream, we should probably build a regulated on-ramp and exchange like Gemini that's a financial institution that people can trust. So that's how we got here to, being, I think we're 6 years into the Gemini journey. We have about 350 employees, and we're just trying to create a simple, safe, reliable place for people to buy, sell, and store crypto.
So at what point, guys, did you realize there was something truly special here, right? The future of finances, I've heard you say this before. What was the tipping point? What about Bitcoin and, the Bitcoin network is so important that you think it has this potential to be something truly significant?
Well, I think that the aha moment for us happened early. This is the first money that was built for the internet itself. Credit cards, ACH, all these other forms of money were built by bankers before the internet existed. So they never contemplated working on the internet. Bitcoin works like your email. It's open 24/7, 365. It's global. You can send it to anyone around the world. Your money works 9 to 5, Monday through Friday. If there's a bank holiday, good luck. So if you want to get a bag of if you want to get cash to London from New York on a Friday night, your quickest method is to go to JFK with a bag of cash, hop on a plane, and take the red eye. Because the banks will be closed after 5 on Friday. If it's a bank holiday on Monday, it might not get there till Wednesday. So money doesn't really work and move around the way we know that money is just information, right? And so we know how quickly we can move information with emails, but yet money is like in the dark ages. So in many ways, it's not global. It's very much broken. And any illusion that it works on the internet, like PayPal, is really like an illusion. right? It's like skinning the current banking system and trying to fit it onto the internet. It's very much a square peg, round hole. Enter Bitcoin. It's money that works like email. It's the internet of money. And so we thought, wow, that's a really big idea. And there's a fixed supply. It's about trusting math. It's enforced by cryptography. It's not about trusting central bankers and how much money they'll print. And it's a very opaque process. So it's just a different system. And it was born in the backdrop of the '08 crisis. People were fed up, right? We had the tech bubble and then the credit crisis. So we're all sort of self-created by bankers. So Satoshi Nakamoto, this autonomous creator, this was his, her, they reaction to the current system continuing to let us down.
Yeah, and maybe you guys can provide some more color on that. So when you talk about this being a different system, technically, how does it work? Walk us through how does blockchain work? How does the Bitcoin network work? And how do you actually transfer these? Because I think it's important for our listeners to understand how this is different from a current financial model and what you guys see not only with the Bitcoin model today, but also where it's going. So maybe if you could walk us through that a little bit.
Yeah, it's definitely a tough question. But there's no headquarters. There's no centralized middleman, right? That sort of like gatekeeps this. So just like your email, it goes on the internet and propagates. When you send a Bitcoin, you're sending a cryptographically signed message to the network that says, hey, change the ledger of the blockchain, which is basically the scorecard, and move this Bitcoin from me to Jason. And if it's cryptographically signed, if I have the private key that controls the Bitcoin address that I'm sending the Bitcoin from, the whole network can validate that very quickly and just adjust the ledger. If a majority of the miners, they're like the people have probably heard this term, they're very much the referees. They make sure that a transaction's valid, that I'm not sending Bitcoin twice to do different people, known as a double spend problem. And so they perform this service by authenticating all of the transactions on the network and updating the blockchain, which is a fancy way of saying the ledger that happens to be distributed. It doesn't live on one server. It lives on many servers around the world. So it's a decentralized, distributed, permissionless system versus our banking system. You need to have permission to get a bank account. Then you have to wire from that bank. The Federal Reserve System or other banks have to accept this. And it's very closed to a majority of the world. Most of the people in the world can't get a bank account or are underbanked and aren't really a part of the financial system. So they don't have a way to save their money. They don't have a way to get a loan or access to credit or a mortgage on their house, all these basic financial services that allow you to start a business, that allow you to create generational wealth and sort of improve your situation. So it's sort of taking this centralized model and distributing it and trusting in math and cryptography as opposed to human beings.
So, which brings back a question. You guys have mentioned this, and we've talked about this from two sides. One is, do you see Bitcoin as a replacement for cash, or is Bitcoin a replacement for gold? Or how should the average person be thinking about what Bitcoin would be used for today versus even in the future?
That is a great question. So I think, generally speaking, stores of value aren't great mediums of exchange because you don't want to spend something that is increasing in value. So if you look at gold from the 1970s, I think it's up something like 26 times. And the dollar, I think, has lost something like 95 to 98% of its value over that same period of time. So you want to store your value in stores of value like gold and spend things that are depreciating like the US dollar. So we think that Bitcoin is really digital gold. And if you look at the properties that make gold gold, such as scarcity, Bitcoin's actually fixed at 21 million Bitcoin. Whereas if you look at the above ground gold stock, it's actually increased by 2/3 since the 1950s. That's how much gold has sort of been mined. So as technology improves or energy costs lower, we're going to go find more gold. And then if you look at another property that makes gold, look at the portability, Bitcoin's way more portable. You can send it around anywhere in the world like you send an email. And so if you go down the line, Bitcoin is as good or better than gold, and we often say it's better at being gold than gold. It's the software version. If an engineer were to sort of sit in a room and design a digital gold, they would have designed Bitcoin. So we think that the primary use case will be storing value and using it as a protection or a hedge against inflation, similar to gold. So we wrote a thought piece this summer in August. The price of Bitcoin, I think, was around $13,000. And we made the case for $500,000 Bitcoin, which might sound a little crazy, but basically how we get there is we look at the market cap of gold, and then we took the market cap of Bitcoin at that time, and we said, for all of these reasons, we think Bitcoin overtakes gold at a minimum. And in order to do so, it would have to appreciate about 35 to 40 times from that current day price. Today, I think the price is around 30,000. So you're looking at a 15 increase. However, we think that gold is sort of overtaking gold for Bitcoin is kind of the starting point, because Bitcoin it's really, at the end of the day, it's a social network, it's software, and the possibilities are really kind of limitless. What you can do with programmable money, but I think the short answer to your question is we view it as a store of value, and things that are stores of value tend not to be great mediums of exchange.
You just said something about money being a social network, and I think that's interesting that you use that language there. I was just curious, what learnings did you guys have from the Connect You Facebook days of what you saw happen there and how that created a network effect with just people? And how do you kind of relate that to what's happening in Bitcoin right now? And maybe even help us explain, like, in March when the pandemic started, Bitcoin was around 4,000. Now we're over 30,000. So what's happening? Help me understand this networking effect that happens with Bitcoin.
So I think money at the end of the day is built on faith. There's a huge faith component, and it's sort of in the eye of the beholder. And for thousands of years, gold has been viewed as money and a store of value. It's really more of a store of value today. In the back pre-fiat dollars, it was used probably more in commerce than it is currently. However, all of that is to say, the more people that sort of accept gold as money and are willing to accept it as payment, the more valuable or more utility it has. And so I think when we looked at Bitcoin, we said, this is a really interesting idea. And as more people sort of adopt and build in this system and or are willing to accept, that will sort of increase the value. And that's a property called Metcalfe's law, where you value networks based on the number of nodes or people or participants in the network. And it's n squared. So meaning that if you buy a cell phone and you're the only person on the planet with a cell phone, it's not a very interesting device.
Right.
If I buy a cell phone, unwittingly or unknowing, I don't even have to know you. I've actually already increased your utility. And if Tyler gets a cell phone, all of a sudden it's 3 to the squared, and we've got a lot more possibilities going on. And so when you look at Bitcoin and the adoption rate, it really operates like a network, similar to a social network, where the more users and the more people that own Bitcoin or are building companies or software on top of Bitcoin, the more valuable that network becomes. So I think I'm sure a lot of our early social networking days sort of informed us in thinking about this money network and not viewing it as like a company or an entity, but really this network of people and this idea of faith that if people sort of buy into it, it will be really interesting.
Yeah, a lot of people make the mistake of trying to value Bitcoin like a company or an equity. Where's the cash flow? I want to do a discounted cash flow model or take some other financial model. And you can't. Like Cameron said, it's a network. So you have to take Metcalfe's law to value it. Back at Harvard, we saw the power of a network, of a social network, and how explosive and how viral that growth can be. Literally, since the moment Facebook launched, it was exploding on campus. And then it exploded to the other campuses when it opened up. A lot of people thought it was a fad, but we saw this monster grow from the beginning. So understanding the power of a network, the first mover advantage is so large. The network effects, as economists would call it, of a network once it takes hold. Many incumbents tried to compete with Facebook. Google had an effort. Google was a much bigger, deeper pocket company back then. They were publicly traded, and they failed. Because once you have one, you don't want to upload your pictures to 10 different social networks. So the users start becoming your ambassadors or fight the other products for you. They become your sort of soldier, or your army, for you. So sort of seeing, the power of Facebook and social networks and how strong they can be, and virally they can grow when you recognize that money's a social network ultimately. And if enough people buy into it, and if it does a good enough job, then there's a lot of upside and opportunity.
So what's happening right now, guys? Why are we seeing this grow so quickly, even in the last 9 to 12 months? Are these individuals, other individuals that are kind of catching this same vision as part of this networking effect? Or are there also institutions? And maybe talk a little bit about like what's happening with MicroStrategy and what Michael Saylor did, or what's happening with Mass Mutual? How are institutions and individuals playing into this kind of current growth of kind of the Bitcoin ecosystem?
That's the $1 trillion question. So I think a lot of what we're seeing in the price appreciation of Bitcoin is really related to the money printing that's been going on with the U.S. federal government and the deficit spending. We've run a deficit every year for the past decade, and we're now getting to the many trillions of dollars. And I think a lot of people are very concerned about the fiscal policy and all of that spending. And if this was the 1970s or the 80s or in the 90s, the classic inflation hedge trade would be gold. And even a decade ago, that would be the move. But today we've got this amazing thing called Bitcoin, which we've already discussed is a digital form of gold that we believe is superior. And a number of folks, including corporate treasuries, starting with MicroStrategy, have decided this is the best way to protect against the scourge of inflation, which a lot of us think is coming, and protect our values, so to speak. So in your earlier question, you asked, is Bitcoin competing with the dollar? Not in the sense of payments. I don't think you're going to be buying a cup of coffee at Starbucks with Bitcoin anytime soon. However, I think a lot of people are looking at their dollars and they're saying, what do these things actually mean? Or what are they going to be worth a year from now, 2 years from now, 10 years from now? And how do I protect that value? I could put it into the market. And if you do, I mean, you might pick some good tickers and outrun inflation a little bit, but most of that's going to be priced up with inflation. The same is true for real properties. Bitcoin, though, has this possibility of being an emergent store of value where people if enough people sort of determine, hey, this is the future of gold, you have protection, but also really upside in the future of money. And I think that's what Michael Saylor at MicroStrategy saw. It's what Jack Dorsey at Square saw. It's what Paul Tudor Jones saw. And there's a number of other veterans that have been building positions over the past year. And there's a lot of people doing it quietly that haven't even sort of discussed it yet. And so people are sort of running for safety. Think of it as a flood that's coming, and people are looking for Noah's Ark. How can I board this thing? And they're sort of concluding that Bitcoin is that option in light of the sort of spending that's just beyond the pale, that doesn't really look like there's any appetite to stop. In fact, the appetite is only growing to do more. The dollar is like the ultimate foil. The dollar is really the foil to Bitcoin. Bitcoin really disrupts gold. Bitcoin's the hardest money known in the galaxy. Gold's pretty hard, but Bitcoin's actually fixed. So I think the pandemic and all the money printing and the stimulus tools to get out of it
has really been that catalyst. And we're kind of on the front line because at Gemini, we get the phone calls from the hedge fund managers, from the companies that want to take bets on Bitcoin. And that's very different because it's been a retail phenomenon that's been driven by people, like individuals, since its beginning. Now we're seeing the bigger, quiet institutional money, the hedge fund legends like Paul Tudor Jones, Stan Druckenmiller, Bill Miller. We're seeing publicly traded companies like Square, MicroStrategy. There's another company today that took a big treasury position in Bitcoin. So that's very different this time around than, let's say, 2017 bull run.
And hopefully Koch Industries is at some point, joins that great group of companies and investors.
Well, I'm glad you brought it up, because that's the question here, is how we should think about this too. Because what I'm hearing you say is, and I've spoken to Michael Saylor and Paul Tudor Jones, these guys, they came in a lot of ways as skeptics, right? Like, they didn't come in here just saying, hey, where do I buy this? They came to you guys and to others trying to really learn about this, and then over time started to see the value in the same way that you guys had. Is that a correct way of kind of framing that up?
I think that's right. I mean, these are folks who have made careers on being really strong skeptics, and they're really good at sort of poking holes through ideas and companies and balance sheets and understanding what's going to work and what's not. And so we really appreciate and welcome that. But it's also super exhilarating once they sort of see the light and come around. And it's happening, I'd say it's accelerating because COVID is sort of accelerating everything. It's accelerating the money printing. We've seen it accelerate industry declines like retail that was sort of happening, but all of a sudden it's happening a lot faster. And I think we're also seeing it with Bitcoin, which is really exciting. That a lot of people are starting to sort of understand this gold thesis. And I think that we're also going to see at some point, I don't know exactly when, a central bank start to buy Bitcoin. And central banks have actually been hoarding gold. They bought more gold in the last year or two than they have since the 1960s. They understand what's up. Whatever they're saying, don't listen to what they say, watch what they do. And they're buying gold because that's what they know how to do. But there will be a central bank that is the first to buy Bitcoin, and that will be a really watershed moment.
So let me try to poke a hole in this, right? Because we've got to try to, in any way, test the waters here. Poking a hole. Regulation. Why would the U.S. government or any government allow this to keep going on, right? When they have control of the fiat currency in other ways. What's your response? Because there's a lot of people, a lot of doubters that start with the regulation piece. So talk to me about it.
So the first thing I would say is that Gemini is a New York trust company. And we've actually been licensed by the state of New York since 2015. And on a federal level, the CFTC, Commodities Futures and Trading Commission, has declared Bitcoin a commodity similar to gold. And that was ratified by a judge in New York in 2015 in the coin flip order. So the legal characterization of Bitcoin on both a federal and a state level in the United States has been established for quite some time, many years at this point. Now, things can be changed. However, the community in Bitcoin and the regulators, we have a very collaborative relationship with our regulators, and our mantra and ethos since day one has been to ask permission, not forgiveness. We always wait for our license to then go and operate. So we're constantly engaged in trying to educate. And New York understood in 2014, when we first started discussing with them, that this was a technology that if they regulate it in a thoughtful manner, it could be an enormous growth potential for the country. And that outweighed whatever sort of misconceptions or risks around the technology might be. In New York, to that extent, we have 300 plus professionals in Manhattan. These are really skilled, high, great career oriented jobs and individuals. We've created a lot of value for the state. And New York has also licensed dozens of other companies because of that. And I think regulators around the world, especially in Europe and the US and Singapore, see the potential of regulating this new industry. And as we get more and more participants in the industry, I think people, get more and more educated. So it sort of becomes this thing with inertia that it's really hard to sort of, stop really. Now, the other thing about Bitcoin is because it's decentralized, you can't actually stop it. It's very difficult. You have to really unplug every server around the world. It's really not possible. So the real strategy is, you can't really fight it. So you have to really work with it. And I think a lot of regulators are seeing that light, just like investors see that potential. So that would be my answer to that question.
It's easy to see something like Bitcoin through the eyes of an American company or an American entrepreneur. But I'm wondering if you zoom out for a second, zoom out to a global viewpoint. What parts of the world, what economies, what things do you see leading in Bitcoin, and maybe even the next step with other cryptocurrencies or something else? Where does this truly benefit? Is America going to be a leader in this, or are we going to be like a fast follower? Are we laggards? How should we think about that?
The Argentine peso has lost 50% of its value as in relation to the U.S. dollar, which is saying a lot because the U.S. dollar is losing its value rapidly. And so if you grew up in Argentina, you think about inflation in a much different way, and it's a part of your life. The U.S. dollar has been comparatively well managed over the past couple of decades. And in Argentina, it's always a constant fight for protection and finding stores of value. And a store of value might be a motorcycle. It's might be U.S. dollars. Bitcoin searches in Argentina are skyrocketing. They live with this problem where their life's work is getting leaked through inflation on a daily basis. You can also look at Venezuela and other parts of the world where inflation is a fact of life. And so it's one of, I guess, the ironies a little bit around Bitcoin or new technology is sometimes the places where it's built or they get it first, they need it the least. And if you think of the developing world, they sort of got cell phones and telecom later. And they're probably the folks who did not have the landlines and the copper who needed it the most. However, they do have the benefit of sort of leapfrogging a lot of the physical infrastructure that we spent decades building. So we think the long-term promise of Bitcoin is super exciting in terms of not only can we do well, but we can do good around the world. We can try and actually help bank some of the billion plus people who are unbanked because all you need is a phone and a Bitcoin address. You don't need to onboard to a bank. And if JP Morgan or Wells Fargo could get there, they'd already be there. And they just structurally or technology-wise kind of can't get there. And we think that the implications of the technology for the developing world and the world at large is really exciting. That's what truly motivates us when we go and build the Gemini mission. It's not just, hey, how do we get more crypto to U.S. people, but how do we get people around the world into this system and part of that prosperity?
I'm glad you brought up the mission standpoint because it's something that's also a key tenet at Koch Industries, right? The ability to give people goods and services in such a way that make their lives better, right? More cost effective, easier to get, easier to use. And what I'm hearing you say is Bitcoin is one of those things as this continues to build out that helps not only the American economy and, Bobby Sue next door, but anybody across the world that may not even be able to get a bank account or start their own business, right, in a more traditional way. So I'm curious, as we think about, individuals can buy Bitcoin, right? So that's already happening. Institutions, and we're starting to see this, they're starting to buy Bitcoin. What are the next steps? Is it a central bank? Is it startups and other companies starting to transact in Bitcoin? I know you guys have something with a credit card coming out around Bitcoin. Give me some of the tentacles that are about to happen.
I think that we're still in the onboarding phase and trying to get people into the system. And the Gemini credit card that we're hoping to launch within the next quarter or so is basically takes the classic rewards credit card approach, but instead of earning airline miles, for example, or rewards points, we allow people to earn Bitcoin or other cryptocurrencies and basically invest in this new future while they're spending their US dollars. So we're really excited about that. And I think we'll be working on expanding Gemini into other parts of the world a lot over the coming years. We're very much still in that building growth phase. And I think we're going to see more and more corporate treasuries enter Bitcoin. And I think I think those dominoes are just starting to fall. I do think the next year or so, we're going to see a central bank. And then there's other projects outside of Bitcoin, such as Ethereum, which are creating a decentralized operating system on the internet, where people are building applications where you can show up and get a loan. You can post collateral and get a loan in a permissionless basis. And they're starting to re-architect financial services, which is really exciting. And so there's a couple of different horizons that are just getting started. Bitcoin is sort of the most talked about right now, because I think in the backdrop of the pandemic, people are trying to understand, okay, how do I react to what just happened over the past year and all the stimulus that's happening? And that's, I think, why Bitcoin has taken center stage. But there are other projects trying to solve different problems that I think will also continue to grow.
If what I heard you say is correct, is every time we print, 15% more of the money supply, my dollar is worth 15% less, right? So we got a bigger hurdle to cover each time. So as we think about Bitcoin, how should we think about these other cryptocurrencies as well, right? One, Bitcoin is a store of value, and you kind of hit on Ethereum, but what other cryptocurrencies or other parts of this ecosystem that are growing that we should be thinking about?
Yeah, and one thing I want to just add, sorry, is that you can buy a fraction of a Bitcoin, and most people don't understand that. So when they see $30,000 Bitcoin, they say, I could never afford that. I guess I just won't do that. And Bitcoin's actually divisible into 100,000 pieces. So you can come to Gemini and buy $5 worth of Bitcoin. And that's just an important point I just wanted to highlight.
Yeah, so when they say, and I've seen this on Twitter and other places, when they say they're stacking sats, what does that mean?
That means that you are basically, a Satoshi is the smallest subunit of a Bitcoin. And so that means that people are basically stacking those small subunits in hopes of one day owning a Bitcoin. And it's a popular meme to sort of highlight the fact that you can buy a very small piece of a Bitcoin and still be part of this revolution.
Right. So do you guys have like shirts that say like we're the original OGs of stacking sats? Because that feels like a shirt that you should have or something on it.
We should, but we just actually stacked Bitcoin because back then Bitcoin was pretty cheap. We tweet about stacking sats a lot.
Hey, Tyler, I think I cut you off earlier. You were going to say something in regards of how we should be thinking about this globally, or how maybe even companies like Koch should be thinking about not just Bitcoin, right? But while we should be storing value in there, how should we be thinking about some of the other cryptocurrencies and ways that can solve some of the other issues that we have with not only currencies, but just how we do business more efficiently?
Yeah, so Bitcoin, I would sort of put in the gold 2.0 store of value quadrant. Ethereum, the way to think of Ethereum is people have heard of cloud computing. And what that means is you basically open an account with Amazon Web Services, you put your credit card in, and you run your application. You run your startup, your business on Amazon. But it's centralized, and Jeff Bezos controls that. Ethereum is basically Amazon cloud computing decentralized. And instead of a credit card, you pay for computing power with Ether. And no one can deplatform you from Ethereum because no one makes that call, just like no one can deplatform you from the internet. But if you build on top of Facebook, then Mark Zuckerberg can make that call. So Bitcoin's like digital gold. Ether's like digital oil. There's a new project that just launched. It's been a couple of years in the making called Filecoin, which is basically decentralized storage. So you pay you can store your files decentralized, just like you store your files on Amazon S3 buckets. So Amazon has two products, Elastic Computing for the computing power, and then the S3 bucket. So the computing is like the Ethereum network, and Filecoin's like the storage network. So you have digital gold, digital oil. You have the storage coin network. Another project that's pretty cool, very cool actually, is Zcash, which is a more privacy-oriented version of Bitcoin. Bitcoin's actually not that it's definitely not anonymous, and it's not that private. It's pseudonymous. The whole world sees movements of Bitcoin, and a lot of people can actually pinpoint who that actually is. You can understand Gemini's addresses. You can see Bitcoin moving over to Coinbase. We use a lot of forensic tools just for KYCing our customers, and people have started to triangulate at least some pretty big addresses. So there could be a future where, like, the commercial privacy of money movements that you have, like, let's say when you send a bank wire, no one knows I sent that wire between my bank and your bank other than the banks. It's a complete inverse with Bitcoin. The whole world sees that movement of money, but no one actually necessarily knows who owns the addresses. Zcash obfuscates that and sort of brings back commercial privacy, which is important, right? If you live in a certain area of the world and you're oppressed, you might want money's, private, to be private, right? There's like the front running aspect of just people seeing flows of money. So Zcash, there's a lot of like valid commercial privacy arguments why it's important to a free democratic society for people to have privacy around, hey, I went to this doctor or something and I paid for this and this. Or if you live in a certain regime, money is a very good way of tracking you, and it can be a bad thing. So Zcash is a very interesting project. It's like Bitcoin, but with commercial privacy built in. And we think long term, some of that privacy or technology will be adopted by Bitcoin and Ethereum. So those are 4 pretty good projects to start digging into especially if you're new. Ethereum, there's a lot of people trying to do Ethereum as well with more scaling and throughput. A lot of times these networks can't handle the throughput of all the transactions and all the demand and excitement. So there's some pretty cool projects that are trying to do that, take a different slant than Ethereum, like Tezos. And you have others. So decentralization is a spectrum. Bitcoin's indexes on very decentralization. But the problem with that is that it's hard to get low latency, high transaction throughput. And Visa, MasterCard being the other side of very centralized, right? But they do very low latency, high volume throughput transactions, but you give up the decentralization. So it's a spectrum, right? And there are different engineering trade-offs along it. And Ethereum, let's say it's here, there are other, global computing blockchains trying to be here or be out here. And so I think I know Ethereum's got a huge first mover advantage. And they are moving to a new blockchain called Ethereum 2 to solve a lot of these things. But there are a lot of interesting efforts out there, also trying to be digital oil and the computing power. So those are kind of like the big broad brushstrokes of like the marquee projects that I would get to know before I started digging deeper.
Yeah. So one of the questions I had for you guys is it's very rare to be at the early stages and seeing either the early stages of the internet or the early stages of social networking. You've seen that with social networking, and again with cryptocurrencies, and I would even say it's bigger, decentralization. So I'm just curious, like, who do you guys follow? Who mentors you guys? How do you keep up? We're about continuous learning here at Koch, and we have roughly 150,000 employees that we're always challenging to stretch themselves in their area of comparative advantage. So, like, what are the areas that you guys do to continue to make yourselves uncomfortable? Maybe that's with each other, or maybe there's external people and external things that you're doing to continually kind of teach and educate and be discerning.
So I would say, I think there's no question, at least for me, that one of the most inspirational people right now is Elon Musk. He's tackling real problems that are really hard. And I think that, a lot of what you're doing at Koch, building real products and real services, is very important and core to like the growth of the economy. Unfortunately, we see a lot in venture capital where sort of VCs are lining up to fund another photo sharing app, which I'm not sure is sort of really pushing the ball forward in terms of prosperity. And that's why we love crypto, because we feel like there's a real value, a real prosperity. So Elon, I think, is a true inspiration. I get really excited about what he's doing. And then another individual, Naval Ravikant, who we've become friends with over the years, is a famed early stage investor, startup investor, angel investor, if you will. And he's got a podcast and a lot of great sort of teachings. I think people are starting to call him Tech Buddha, because he's got a lot of great like life advice and thinking. And so we use Twitter a lot. So I follow a lot of these people on Twitter. And then I think podcasts are a great way, similar to the conversation we're having right now. You get to sort of jump inside that person's brain and hear their thoughts and how do they think about the world. So those are two that are big for me.
Anything else, Tyler? Anything else he's missing?
Yeah, I mean, I think kind of going back to Twitter, I follow all the people that I really respect and look up to. So all of these early cryptographers and cypherpunks, entrepreneurs, just thought leaders, it's all happening there, right? What a fantastic, amazing place. And you don't have to tweet. You don't even have to contribute. You can just open up an account, a zombie account, and just follow people. So I get a lot of my news and learning there. Like Cameron said, podcasts, reading, try and always hire people smarter than me. Just surround yourself by people you really respect, that are really brilliant. I think that was one of the greatest part about Harvard, not necessarily what you learned in the classroom, but all these brilliant people you were around outside of the classroom, the conversation at the cafeteria, the water cooler at the boathouse. So I think it's really just surrounding yourself and building an environment, whether it's the media you consume, right? You can tailor that, you can design that, or the people you hang out with. If they're a lot smarter with you and they're very successful and doing really cool things, just by osmosis, like they're going to level you up. And yeah, it's never been a greater time to self-directed study, right? To read on a Kindle or to go down rabbit holes on the internet. Much of our early crypto learning happened that way, happened on Reddit, happened on Twitter, happened on the internet. It's an amazing thing.
How do you guys think about risk? I had the pleasure of having dinner with Charles Koch right before the pandemic, and I asked him, how do you build a company like Koch Industries from 20 million to over $120 billion and keep it private? And part of his answer I thought was fascinating, where he says, we took enough risks and made enough mistakes, just not enough to sink us. And so Charles, even at 85, lives out over his skis, right? He's continuing to push us to think differently and absorb risk. And I was just curious, the worlds that you guys are going into, had we looked at them in social networking before? If I'd asked somebody, if I did a case study on social network and said, would you like technology to help you with your friends? You'd be like, I had enough friends. You wouldn't have asked for it, right? Or if you said, I need decentralized services, most of us wouldn't have said, hey, I need this, right? These are brand new areas, TAMs that didn't exist at all. So I'm just curious, how do you guys think about taking risks?
So we love the frontier. We're super curious. Crypto's the frontier we're on now, but it's exciting. It makes sense. And I think the real risk is sitting on the sidelines. The real risk is never taking the bet, never going for it, never swinging for it. Our dad's an entrepreneur, a self-made entrepreneur in technology and B2B software. So we grew up in a startup. We saw risk taking, we saw it work out, and that was a true gift. But I really think, we wear it like I sleep well. Like I'm comfortable with a lot of risk, and I think that's an important skill. And if you're not, maybe you got to dig into like why that is. But I really think the risk is getting left behind and doing nothing and sort of like paralysis by analysis, and not accepting that everything will change. Money's a technology and invention that's been around for thousands of years, but it's always changing. When you look at the history of things, It's always evolving from a precious metal to paper backed by metal to paper backed by nothing to software cryptocurrency money. This was always going to happen. It's a natural evolution. That's how the world works. It's all about progress. And a lot of people are afraid of new ideas. They're terrified. They say they aren't, but like the freedom to really go out there and think about new ways to disrupt things and be creative. A lot of people are terrified by that. But like, to me, the danger is like not being out on the frontier. It's not exploring. It's not learning. It's not being curious. And it's so much more fun to be an optimist. And the upside's so much greater. Like, even if Elon Musk like failed, like with SpaceX or whatever, like, what an amazing story to tell your grandkids. Isn't that worth it to just go for it and live with like disappointment as opposed to regret? So to me, part of like growing up around, a household of entrepreneurs, but like, to me, it's so obvious that you would just be like going that way and going for it. So,
yeah, that's great. Well, hey guys, I want to do something fun with you that we often do with some of our guests. It's kind of lightning round questions. So I'm going to give you a bunch of questions. One of you can answer each one. Don't cheat. You both can't answer each one. You get one, and you only get a sentence or two to answer each one, okay? So you guys can decide who wants to go first, but what technology currently do you think is the most overhyped?
That's a good question. I guess like virtual reality, and so technology tends to get like overhyped and go in waves. I think it's going to happen, but a lot of these things take longer. And for like the Newton was the first smartphone in the 90s, and it just didn't work. But then the smartphone happened. So I think a lot of technology, even crypto, gets like heavily overhyped, and at times heavily underhyped. But long term, like the hype's worth it.
Okay, so I'm going with virtual reality. That was more than 2 sentences. I'm going to cut you off next time. Don't cheat on me here. Okay. What's one thing most people would be shocked to learn about one of you guys?
I would say that we're actually different people. We have different personalities. Even though we look the same and we're pretty much the same on paper, we are, pretty distinct.
Great. Favorite book you've read recently?
I would say No Rules Rules, the Netflix book. They talk a lot about the management principles and style and culture. And it was a fascinating read. Definitely learned a lot. And we're going to bring some of that into Gemini.
Favorite superhero? And I'm going to let both of you answer this one because it's that good a question.
I think Eddie Van Halen is a superhero. I think he's the greatest guitarist of all time. I don't know if that counts, but
I'll take it. Tyler, you got one? I'm going to let you have this as favorite superhero. If you don't think it's Eddie Van Halen, of course.
I would say Beethoven.
I'm expecting like a Superman or Batman or something. You guys are stretching me here.
I know. We're cheating, right? Maybe. Breaking the rules.
Okay, so I know you're both super competitive, right? Ex-rowers, Olympians. What do you guys do now to kind of deal with the competitive nature?
So we've always been competitive, but in a constructive way. It's never been like negative. So if Cameron achieved something, I was like, oh, I can do that because we're identical. So we've always pulled each other up. I've seen so many siblings kind of do the reverse, like kind of push each other down, which is really sad. But we've always kind of said like, hey, your victory is mine and mine's yours. And we're a team. And whether it's rowing or playing Legos as kids, or we played piano duets or building companies in crypto, like we're just there for each other and kind of pushing it up.
That's great. Favorite movie?
I think Chinatown.
Yeah, I was going to say that's got to be in there, Chinatown.
Maybe Shawshank for you, Tyler. Shawshank
Redemption. I love Shawshank, but it's I don't know if it's top 5 for me.
Yeah. Well, Shawshank, one of my wife's favorites, so if it is, that's okay.
And The Social Network, of course.
Yes.
Right?
Of course. I mean, I don't know how you leave that one out. Guys, I greatly appreciate your time today. I will tell you, Ben Mesrek, who wrote the book, Bitcoin Billionaires, on you guys, has said you two are some of the most underrated, misunderstood people that are high value to society and what you're doing. And the time that I've gotten to know you, I couldn't agree with them more. I think some of the things you guys are about, not only from just a forward-looking perspective, but I've found you to be authentic and transparent. And also, even watching you through the all the challenges with Facebook and other, full of integrity. And that's very important to us at Koch and a lot of our companies is high-level people full of integrity, visionaries willing to take risks and bring others along. What I've read about you, our times interacting together, I've noticed all of that about you. So guys, thanks for your time today. Greatly appreciate it and look forward to spending some time up with you again in New York when this pandemic's over.
Thanks so much, Jason. It's a real pleasure talking with you. And I love a lot of the values that Koch espouses and love the fact that Charles is still over his skis at 85 with fire in his belly. And he's built a phenomenal organization. We're really excited to spend some time together.